Welcome to Dr. Fred Markets. This is not financial advice. Every day, the world of finance, crypto, and artificial intelligence moves fast, really fast, and staying informed is the only way to stay ahead. That's exactly what we do here, together. Let's get into today's video.
Your AI stock boom is secretly an energy trade in drag. Verdict: AI isn't a tech story anymore. It's an energy cartel with a hoodie on. Let's start with today's scoreboard. Nvidia's up another 2.6% at $226.56, dragging the whole AI index higher, while the S&P 500 barely twitches at plus 0.2%. The AI hardware dealer keeps printing gains because every model, every chatbot, every hallucinated answer runs on one expensive addiction: electricity. Now look at actual energy. LNG is down 1.29% today at $241.16, while headlines scream about U.S. inflation jumping to 3.8%, thanks to an energy spike driven by the Iran war. Inflation blames energy costs, but the market is still discounting the one business that literally invoices the entire AI ecosystem every second the GPUs are turned on. Here's where it gets cute. Those same AI firms that investors worship are racing to lock in long-term power deals and building data centers next to cheap gas and LNG export hubs. They don't tweet that part, but the spreadsheet doesn't lie. AI margins live or die on who controls cheap electrons, not who writes the prettiest model card. And now the cliff. Everyone is trading the cocaine, nobody is buying the dealer. You chase Nvidia because you like shiny chips, while the power suppliers quietly invoice your entire AI fantasy. Put these three signals together and the story is obvious. Signal 1. Nvidia's rip higher is really a proxy bet on compute demand. That's code for, we think future electricity consumption goes vertical. AI chips are just a leverage bet on power usage. Signal 2. LNG drifting lower on a day when inflation gets blamed on energy costs is the market screaming. We see the headline, but we don't understand the mechanism. Prices wiggle day to day, but AI's power hunger doesn't take a weekend off. Signal 3. Hyperscalers signing multi-year power contracts and parking data centers on top of cheap gas fields means they already know the truth. The bottleneck isn't models, it's megawatts. The connection nobody wants to say out loud. AI is turning energy stocks into the quiet core infrastructure of the entire digital economy. We already had this once with the internet. Telecom pipes stayed boring until they weren't. AI is the same game, but with kilowatt hours instead of fiber. Here's the mechanism in plain English. Every AI inference has a power cost. Multiply that by billions of queries a day. Training a frontier model burns through as much electricity as a small city. That power doesn't come from magical clouds. It comes from LNG, gas, nuclear, hydro, real-world energy assets with real cash flows and almost zero narrative on TikTok.
Does what you just heard shift something for you? That feeling, that need to know more, is exactly the right reaction. Most people never get there. You just did. Let's keep going.
So when you buy AI stocks without touching energy, you're making the dumbest trade on the board. You're long the most cyclical, hype-driven part of the stack and ignoring the part that collects rent from everyone. You're tipping the casino host and forgetting the house. This is not financial advice, but here is the truth. If AI usage keeps compounding, the bill for power scales faster and more predictably than the hype cycles. Models change, frameworks change, chips get replaced. But every single one of them still has to pay the electricity tab. The edge sits with the businesses that sell the electrons, not just the companies that burn them. So what do you actually do with this? First, understand the one new fact. AI's real input cost is energy, not engineers. Salaries make headlines, power bills drive margins. When you read AI expansion, translate that as locked-in energy demand with a tech gloss. Second, learn the mechanism. AI profits flow uphill to whoever controls long-duration, reasonably priced power. That means utilities with data center contracts, LNG exporters feeding power-hungry regions, and integrated energy names investing directly into AI-adjacent infrastructure. Follow the power purchase agreements, not the press releases. Third, your action step. Next time you analyze an AI winner, pair it against at least one energy name that benefits when AI chews more power. Ask 3 questions. 1. Who supplies electricity to this AI giant, and at what terms? 2. Which listed companies own the gas, LNG, or generation behind that supply? 3. Whose earnings actually rise when GPU usage spikes? You don't need to become an energy engineer. You just need to stop treating AI like magic and start treating it like an industrial load. The market is overpaying for the story and underpaying for the power bill. So while everyone else argues about which model is smarter, you focus on who gets paid every time they hit run. This is not financial advice. But if your AI thesis doesn't include energy, you don't have a thesis. You have fan fiction. You learned one thing today. AI is an energy customer first, a tech revolution second. 3-point summary. 1. Nvidia's run is a side effect of exploding AI power demand. 2. Energy stocks, especially LNG and power-linked names, are the quiet backbone billing that demand. 3. Smart money traces AI hype back to the real winners, the companies that sell the electrons. Subscribe if you want the part of the story that doesn't fit in the pitch deck. Tomorrow, we follow another hidden invoice. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's a wrap for today on Dr. Fred Markets. I hope this gave you something to think about, a new angle, a clearer picture, a better question to ask. Remember, this is not financial advice. Do your own research, always. If this video added value to your day, subscribe. It's free, it takes 2 seconds, and it's the best way to support this work and keep it free for everyone. You'll also find every video as a full article on the blog, drfredmarkets.com, and the newsletter is in the bio. I'm Dr. Fred Markets. See you in the next one.